when we have an S&P ES futures setup, that opens the door to a lot of things. The micro S&P, options on the S&P futures, SPY, which is the common way we often will set up our trades in the room. Right? And of course, yes, the SPX. Okay. So they're all S&P setups based on the ES. That's the first thing. That's what I've taught forever. It works really, really well. Why? Simply put, the ES is a more complete look at S&P behavior. Okay. Now, then that takes us to what we want to do. So let's use this SPY setup that we had earlier, and remembering that it was an ES rationale behind it. And if you recall, this was the zone, right? That moderate to conservative area. So let's get down to specific time, right? So this was the 945 and 950 candle. So I'm going to write down really quickly here. Let's pay attention to the 945 and 950 candle. Now this is important because what I'm going to do is walk you all through the SPX specifically, because the SPY setup we have here in the notes. So the question is, how would we set up SPX? Okay. And anytime I talk about ES, I'm not going to set it up 3 and 4 different ways, but remember the ES futures is the touchstone for everything. So here's the 945 and 950 candle for the SPX. And these would be looking at February 12 SPX puts, right? Now, at that moment in time, this could be, a lot of folks might look at an at or slightly in the money SPX. Well, if you looked at SPX futures, SPX options, right? When the futures are in the zone, a lot of times you're going to see an at or slightly in the money strike is really quite expensive. One of the reasons SPX presents so much risk is it's a European option style, so it has a very different type of behavior than the SPY, which is an American style. And the cost is really tough. And that's where a lot of small account traders saying, Rog, I want to take advantage of the volatility, but I don't want to blow up my account. Agreed. Okay, absolutely agreed. It would probably be nothing to say the 60-30 and 60-35s are going to be somewhere north of $1,100 or $1,200, $1,400 at this point per contract. Okay, so what we do then, and I'm going to show you an out of the money. So wait a minute, Rog, we go out of the money on SPX. It's the only time that I'll go out of the money in an effort to be realistic about the downside target, but also not risk too much of the account. So what I'm going to do is plot the value of, and they're going to sometimes be pretty far out of the money. I'll start off with looking at, say, a 6,000 or even a 6,010 strike. 6,000 or 6,010 strike. I could go all the way out to say 59.75. I wouldn't want to really go much further away than that. But let's look at the pricing of a 6,010 put. So what I'm going to do now is show you all the pricing of that strike. And again, we'll look at the time. So 940 to 945. And you can even do this on a 1-minute chart. A lot of times it's even better to do in a 1 minute than what I'm doing here on the 5, but I want you all to get the feel for the volatility of this, okay? So when this thing is moving up to that trigger, price fell down to $8, and you can see here about $7.10. That's still pretty spendy. So you could go down to 6,005, you could go to 6,000, but I would not exceed 59.75. Okay. Well, I shouldn't say 50. I wouldn't exceed, here, let me show you here. I'm already there's so many things we have to jump around. Hang on, let me pull up the SPX here. Yeah, I wouldn't exceed 75. Okay. Where am I getting that number from? Right here. If I can do 6,010, 6,005, even 6,000 even. Great if that's in a good scalable, but no lower, further away a strike than this, because we are going out of the money. So I just wanted to make sure I was right on the pricing. Yes. Everyone with me so far? How do you choose your strike? That's what I'm talking about right now. How do you choose your timing? Timing is the ES. All right, the strike is out of the money based on either, if you can use the HPMRs, great. If not, I wouldn't go really much further than the aggro level of the DPMR. So I'm just looking at the value of the price movement ranges. That's it. I need a price level to pick. That's it. All right, but this is a day trade based on the 5-minute. So let's go back to the pricing and you can see how that works. I'm not going to spend too much time on this, but I just want to show you all just how it works, all right? So here is that set of candles we were talking about before. So this is your window for entry. It's still pretty spendy, but this is a 6,010. And then it went up to, as we're scaling out, approximately, call it $12. That's it. That's really it. But every decision I'm making is based on the ES. The thing that makes the SPX a little bit different is that European style option and the cost and the fact that I will use either the HPMR zone or the aggro edge of the DPMR zone to determine a realistic out of the money strike. And this works with puts or calls, but I was showing you the SPX alternative to that SPY setup from this morning. And that's it.